This is Mac OS Ken.
Reactions to Apple's Q4 earnings. Berkshire Hathaway sells a lot of Apple shares. And an Apple investment that is out of this world. It is Monday, the 4th of November, 2024. I'm Ken Ray, and this is news from Mac OS Ken. Brought to you by yours truly and sponsored by Incogni, helping you take back your personal data. Get 60% off an annual plan with code MacOSKen at incogni.com/MacOSKen. This show is also supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSKen. Perhaps it was the combination of great earnings for September and tepid guidance for this quarter, but last week's fourth quarter earnings call from Apple moved no analyst needles. Ratings stayed the same, price target stayed the same. Apple watchers on the financial front seem to have taken the numbers in stride. Apple 3.0 ran parts of a number of notes in the Q4 call's wake. Raymond James analyst Srini Pajur remains optimistic about an AI-driven iPhone upgrade cycle in coming quarters, despite a forecast from Apple that implies slower iPhone 16 growth this quarter. Apple's hardware acumen, focus on privacy, and overall ecosystem leave the Cupertino company uniquely positioned to offer on-device AI features in the firm's estimation. Raymond James has an outperform rating on Apple shares. Pajur's price target on the shares is $250. Morgan Stanley analyst Eric Woodring basically stated the same no movement argument I mentioned a moment ago. His note says Apple's September quarter results did not change much of the debate, as bulls, like Morgan Stanley, will continue to point to the potential for a major upgrade cycle starting with the iPhone 17, while bears will say the stock remains expensive on fiscal year 25 numbers. Kind of funny. While he sees Apple's forecast implying slower iPhone 16 growth, since that's what the bears were expecting anyway, he doesn't see anything that should drive Apple shares lower. Morgan Stanley has an overweight rating on Apple shares. Mr. Woodring's price target on the shares is $273. Wedbush analyst Daniel Ives likes the strength he sees at the high end of the iPhone line. His estimates have roughly 80% of iPhone demand coming from iPhone 16 Pro and iPhone 16 Pro Max versus about 65% in a historical iPhone launch. So even if growth is slowing to low single digits, the current line is driving higher revenues. Wedbush has an outperform rating on Apple shares. Mr. Ives' price target on the shares is $300. Evercore analyst Amit Daryanani is still humming his stronger for longer tune, while growth for iPhone of 4% to 6% is modestly below the street expectations. He and his think Apple could see upside to both revenue and earnings per share, driven by a longer iPhone cycle that could help dampen normal seasonality in March and June, while services and wearables portfolio both see a more sustained acceleration. Evercore has an outperform rating on Apple shares. Mr. Daryanani's price target on the shares is $250. A piece from Barron's pulled from a few more analysts for its piece on uncertainty around iPhone upgrades. Oh, not whether they're going to happen, but when a major upgrade cycle is coming. Maxim Group analyst Tom Forte was among them. According to him, it is difficult for us to discern if we are in the early innings of an AI-fueled supercycle for iPhone upgrades. When you couple that with management's guidance for low single-digit to mid-single-digit sales growth in the first quarter of fiscal year 2025, we believe we can state confidently that if there is a supercycle, it is off to a very slow start. Maxim has a hold rating on Apple shares. Mr. Forte's price target on the shares is $215. And finally, following Darianani's stronger for longer train of thought were Morningstar analyst William Kerwin and Oppenheimer analyst Martin Yang. Kerwin thinks Apple Intelligence will spur a return to mid-single-digit growth for iPhone revenue, but believes the impact will be drawn out over the next 2 fiscal years. Meanwhile, Yang says Apple Intelligence will have a positive impact on iPhone replacement in calendar year 25. No posted rating or target for Morningstar's Kerwin. Oppenheimer has an outperform rating on Apple's shares, with Yang's price target on the shares at $250. Apple shares were off 3 points on Friday to close just under $223. The aforementioned Barron's piece put that down to the company's disappointing December quarter guidance. It will be interesting to see what happens to Apple shares today in light of news over the weekend from Berkshire Hathaway. Another piece from Barron's says that firm sold 100 million shares of Apple in the third quarter, reducing its stake in the iPhone maker to 300 million shares. That cut of 25% follows a nearly 50% cut in the second quarter. What gives? Well, Berkshire Hathaway chairman and CEO Warren Buffett has not said, leaving watchers to guess. Barron's indicates Buffett may think Apple's not likely to grow the way it was growing when he started buying in 2016. It's also possible he wanted to rebalance the Berkshire equity portfolio. Earlier this year, shares of Apple accounted for roughly 45% of that portfolio. Today, they make up less than 25%. A piece from Reuters indicates that the divestiture is part of a broader retreat from stocks by Berkshire Hathaway. Meanwhile, Barron's points out that Apple is still the firm's largest equity holding. While Wall Street worries over new iPhone sales, Apple offers a fix for an older one. Late last week, the Cupertino company announced a service program for iPhone 14 Plus, addressing an issue with the device's rear camera. According to the company, Apple has determined that the rear camera on a very small percentage of iPhone 14 Plus devices may exhibit no preview. Affected devices were manufactured between the 10th of April 2023 and the 28th of April 2024. If your iPhone 14 Plus has that problem, Apple has instructions on how to see whether your device would be covered by the program. If so, it says Apple or an Apple-authorized service provider will provide service free of charge. More news in a moment, but first a word from today's sponsor, Incogni, helping you take back your personal data. Information about us is everywhere. It's kind of part of being alive today. Here's the drag, though. Companies are compiling that information and selling it to other companies. Company A knows a little bit, Company B knows a little, Company C buys info from A and B, and suddenly Company C knows a lot about us. And they are selling too. Or sometimes just losing the info they have on us to bad guys. Then all of a sudden, this trade in our information that we barely knew was happening makes us the target of spam, robocalls, even identity theft in a worst-case scenario. Blunt that threat with Incogni. They know who these data brokers are and how to get our info removed. And they don't stop, since a lot of times, data brokers don't stop either. Since I started with Incogni, they've gotten over 100 data brokers to remove my data, saving me more than 80 hours I'd have spent trying to do it myself. Incogni takes the hassle out of protecting our data by automatically contacting data brokers on our behalf to get our data pulled. Take your personal data back with Incogni. Get 60% off an annual plan with code MacOSKen at incogni.com/MacOSKen. They've got plans for individuals as well as plans to cover friends and family, And they come with a 30-day money-back guarantee. INCOGNI. Join the huge number of people who have taken control of their personal data with Incogni. Get 60% off an annual plan with code MacOSKen at incogni.com/MacOSKen. Apple Intelligence isn't the only reason people might switch to iPhone or upgrade an old one. iPhone satellite services are compelling, and Apple is investing to make them better. 9to5Mac says satellite services provider GlobalStar has disclosed an expansion of its deal with Apple. The Cupertino company will commit an additional $1.1 billion for upfront infrastructure prepayments to increase the capacity of satellite services. Additionally, Apple will take 20% ownership of GlobalStar in an equity deal worth about $400 million. Good news on tablet sales from trackers at IDC. The firm issued a press release on Friday showing shipments for the category up just over 20% for the September quarter. iPhone is still crushing it in terms of market share, though growth was next to nil. Running down the top 5, Apple was first in tablets with estimated shipments of 12.6 million units in the September quarter, market share of 31.7%, and growth of 1.4%. Samsung was second with shipments of 7.1 million tablets, a 17.9% global market share, and growth of 18.3%. Amazon was third with shipments of 4.6 million units, a market share of 11.6%, and growth of 111.3%. Huawei was fourth with shipments of 3.3 million units, a market share of 8.2%, and growth of 44.1%. And Lenovo rounded out the top 5 with estimated shipments of 3 million tablets, a market share of 7.6%, and growth of 14.7%. Looking at Apple specifically, IDC says iPad was helped by back-to-school sales, particularly for iPad Air. They say the new iPad Pro performed below expectations as it is priced too high for emerging markets. As for growth for the segment as a whole, IDC says the dismal 2023 market makes for easy year-over-year comparisons, but optimism is growing on the supply side of the industry. And finally today, news of an interesting acquisition for Apple. Pixelmator, the maker of graphics editing software for iOS and macOS, says it has been picked up by the Cupertino company. Highlighting its small team, its razor-sharp focus on design, ease of use, and performance, Pixelmator's announcement says by joining Apple, it'll have the ability to reach an even wider audience and make an even bigger impact on the lives of creative people around the world. Such acquisitions often lead to the acquired property disappearing, its technology folded into other Apple properties. I'm looking at you, Dark Sky, and Workflow, or really the spaces where you used to be. Anyway, it doesn't look like that'll be the case this time. Not right away, at least. While Pixelmator has signed an agreement to be acquired by Apple, subject to regulatory approval, the announcement says there will be no material changes to the Pixelmator Pro, Pixelmator for iOS, and Photomator apps at this time. Stay tuned for exciting updates to come. macOS Ken, brought to you by me and sponsored by Incogni. Get 60% off an annual plan with code MacOSKen at incogni.com/MacOSKen. This show is also supported by people like you, patrons through Patreon. Find out more and add your support at patreon.com/MacOSKen. advertising handled by Backbeat Media, online at backbeatmedia.com. You can reach me a couple of ways. Info at macoscan.com or call 716-780-4080. Until next time, that is news from macOS Ken. I'm Ken Ray.
Ciao.